Micron just dropped one of the most bullish earnings calls in semiconductor history, and if you're not paying attention, you're going to miss what could be one of the biggest investment stories of the decade. Today, we're breaking down the top 10 most important takeaways from Micron's Q3 fiscal 2026 earnings call, counting down from number 10 to the single most transformative thing they said. Let's get into it. Coming in at number 10, Micron is swimming in cash. The company is projecting roughly $30 billion or more in free cash flow next quarter alone, and management made it crystal clear. 100% of excess cash goes back to shareholders through buybacks and a growing dividend. They recently hiked the dividend by 30%, and buybacks are set to accelerate starting in December 2026. At number 9, HBM just hit a massive milestone a year early. Micron previously forecast that the high-bandwidth memory total addressable market would cross $100 billion in 2028. They now say it crosses that threshold in 2027, a full year ahead of schedule, driven by surging AI chip demand. Number 8 is a huge one for investors worried about deal risk. Micron's Strategic Customer Agreements, or SCAs, are legally ironclad. These are take-or-pay contracts. Customers must pay for the agreed volume, whether they take delivery or not. There's no cancellation clause. Period. And customers have already put up over $18 billion in cash deposits as collateral across 16 signed agreements. At number 7, the supply-demand imbalance is staggering. For both DRAM and NAND, customer demand is so far above what Micron and the entire industry can supply that management says shipment growth is now constrained by supply, not demand. Some customers are receiving only a fraction of what they need, and there's no clear intercept point on the horizon. Number 6 reinforces that Micron is already booked out on HBM through 2028. Customer requests for HBM3E and HBM4 volumes extend well beyond 2027, and even the volumes locked into multi-year SCAs are less than what customers actually want. Demand is simply overwhelming supply across every HBM generation. At number 5, Micron is going all in on capacity to the tune of $27 billion in fiscal 2026 capex, stepping up to above the mid-40s billion range in fiscal 2027. Most of that increase is construction of new greenfield fabs in Idaho and Taiwan, though management noted those facilities won't contribute meaningful bits until 2028 and beyond. Coming in at number 6, number 4, NAND is also severely constrained, and Micron is dominating that market. Enterprise SSD revenue hit $5 billion in Q3 alone as part of a record $25 billion data center quarter. Micron is the world leader in QLC NAND and the first to ship Gen 6 enterprise SSDs at volume. At number 3, agentic AI is quietly creating a new demand wave for low-power DRAM in data centers. As more CPU-based servers deploy for AI inference workloads, Micron's DRAM in the SOCM form factor is gaining serious traction. Micron pioneered this category and remains sole-sourced or lead-sourced with key customers. Number 2, the China competition question. CXMT and YMTC have grown, but the overwhelming majority of their output stays inside China. Micron's strategy is to stay ahead by focusing on the most complex, highest performance products, HBM, high-capacity DIMMs, leading-edge NAND, and nearly 65,000 patents defending their IP moat. And the number 1 takeaway from this earnings call, Micron is fundamentally transforming its business model. Strategic customer agreements are now expected to cover roughly half of the company's total revenue, locking in pricing, volumes, and multi-year cash flows that make Micron look less like a cyclical chip company and more like a critical infrastructure provider for the AI era. That is a seismic shift, and the market is just beginning to price it in. If you found this breakdown valuable, hit like and subscribe. We'll be covering every major semiconductor earnings call this season. See you in the next one.